Get ready to have your mind blown. Our latest update on Ripple technical chart analysis will change the way you think about the market. For those intrigued by Ripple or holding any of it, this video is essential viewing. Welcome to Green Hair Crypto, your go-to for daily crypto insights. For crypto enthusiasts, this is the place to be. Subscribe to stay informed about all the latest crypto news and price predictions, and stay ahead in the crypto game. In this video, we intend to analyze the technical analysis of Ripple using 4-hour frame, and we will examine various scenarios that can occur for the price of Ripple. Let's investigate Ripple's price movement for today. The Ripple's price movement has been quite significant, with a 3-step climb that culminated in a price of approximately 0.6414. The most recent point it reached was 0.6176, which marks a notable milestone as it successfully broke through the previously established trend line. However, I'm hesitant to conclude that the price has turned bearish just yet, as the upper cloud remains intact, and the range of 0.5624 is still a critical area that needs to be breached. In my analysis, the breaking of the trend line has created an interesting scenario. One possible outcome is that the price will react to and bounce off the upper cloud range at 0.5904. This area is significant because it represents a major resistance level that has been holding back the price's advance. If the price manages to break through this range powerfully, it will likely lead to a subsequent drop to the lower support area around 0.5624. Alternatively, if the price bounces off the upper cloud, it may retest its own resistances, potentially leading to a further increase in value. This would be a bullish outcome, as it would indicate that the price is regaining momentum and could potentially push beyond its previous highs. In conclusion, while the trend line has been broken, there are still several factors at play that need to be considered before making any definitive conclusions about the direction of the price movement. The upper cloud remains an important level of resistance, and the range of 0.5624 is a critical area that needs to be breached. Only time will tell how these factors will play out and what ultimately happens to the Ripple's price. If you're still viewing, don't forget to hit that like button. Your likes help us create more content. And stay with me to examine some key indicators to gain a better understanding of the Ripple market. Today, Ripple has an ATR that shows high volatility. When a coin's average true range or ATR shows high volatility, it indicates that the price of the coin is experiencing significant fluctuations with large swings in both directions. This can be a sign of a highly unpredictable market where price movements are not following a clear trend or pattern. High volatility can be caused by a variety of factors, such as sudden changes in market sentiment, unexpected news events, or increased trading activity. When a coin is experiencing high volatility, traders should exercise extreme caution and adopt a more conservative approach to trading. High volatility can lead to whipsaws, where the price rapidly moves in one direction only to quickly reverse course. Traders should avoid taking large positions or relying on single trades, as the risk of significant losses is high. Instead, they should focus on smaller, more frequent trades and prioritize risk management techniques such as stop-loss orders and position sizing. Traders should also consider adjusting their trading strategy to adapt to the high volatility environment. They may want to focus on scalping or day trading, which involves taking advantage of small price movements within short time frames. Alternatively, they can look for opportunities to trade during times of lower volatility, such as during periods of consolidation or when the ATR is trending downward. In general, traders should prioritize discipline and adaptability when dealing with high volatility markets, as the key to success is being able to navigate the uncertainty and adjust their approach as needed. As of today, the ADX for Ripple is below 20. When a coin's average directional index or ADX is below 20, it indicates that the market is experiencing low directional movement and traders should be cautious. This can be a sign of a range-bound market where prices are stuck within a narrow range with no clear trend in sight. In this scenario, traders should focus on mean reversion strategies, looking for opportunities to buy or sell based on overbought or oversold conditions. Traders should also be aware that the ADX reading below 20 does not necessarily mean that the market will stay range-bound forever. A sudden increase in volatility or trend development could occur at any moment, causing the ADX to rise above 20. Therefore, traders should monitor the market closely for signs of increasing momentum or trend development, such as changes in volume, candlestick patterns, or moving average crossovers. By being vigilant and adaptable, traders can capitalize on potential trend reversals or breakouts. In terms of trading strategy, traders with an ADX below 20 should focus on smaller position sizes and tighter stop-loss orders to limit their exposure to potential whipsaws. They should also consider using hedging strategies or scaling into positions gradually to manage risk. Furthermore, traders should prioritize intraday analysis and adapt their strategy according to the market's behavior, adjusting their approach as needed to respond to changing market conditions. By doing so, they can increase their chances of profitability and minimize losses in a low volatility market. And that's all for today's coverage of Ripple's latest updates and chart analysis. I hope you found the information valuable and thought-provoking. Thanks for joining us, and I'll return with more updates soon.